The local tax layer is the layer almost no coach checks at registration time, and the city revenue department is the agency that finds you on its own schedule. Federal taxes are obvious because the IRS is loud. State taxes are obvious because the Department of Revenue sends mail. City and county business taxes, much quieter. A coach can run a practice in Philadelphia, NYC, or San Francisco for 2 years without registering for the local tax that applies. And then a letter arrives with 2 years of back filings due and penalties stacked on top. Federal is known to everyone. State is known to most. Local is the layer most coaches genuinely do not know exists. The work in this unit is a 5-minute discovery check, not a project. If your city runs a local business tax, and the major ones do, you register, you file, you add the account to your annual calendar, you move on. If your city does not, you write confirmed not needed in your founding pack notes, and that closes the loop. The cost of running the check is small. The cost of skipping it and discovering the regime later is the load-bearing cost. The local tax layer is not universal. Most U.S. cities and most U.S. counties do not have one. What makes the layer worth a deliberate check is that the cities which do run local business taxes also concentrate a meaningful share of U.S. coaching practices. Philadelphia, New York, San Francisco are obvious examples. A coach in those cities who skips the discovery search at registration time discovers the regime later, on the city's timeline rather than her own, with 2 or 3 years of compounded late filing penalties attached to a tax that would have been small if filed on time. 3 cities carry the illustration weight for this unit, and the point is the pattern, not the list. Philadelphia runs the Business Income and Receipts Tax, BIRT, with 2 components, one of which catches solo practices from the first dollar of activity. New York City runs the Unincorporated Business Tax, UBT, which exempts the first $100,000 of income but still requires a filing to claim that exemption. San Francisco runs a gross receipts regime tiered by industry. Your city may run something with a different name and a similar structure. The methodology that finds yours is identical regardless. Philadelphia BIRT has 2 parts working independently of each other, and the part that catches solo coaches is the one that ignores the small business exemption. A net income component applies to net income, with an exemption threshold that excuses small practices from owing on that piece. A gross receipts component applies to gross receipts from $1 of Philadelphia activity. The exemption on the income side does not extend to the gross receipts side. A solo coach in Philadelphia making $40,000 owes the gross receipts component on every dollar of that $40,000. The filing is annual. NYC UBT has a generous exemption and a non-negotiable filing requirement that catches non-filers regardless of whether tax is owed. First $100,000 of income from an unincorporated business operating in New York City, exempt from the tax itself. Filing the UBT return is still required to claim the exemption. The trap shape is specific. A coach who does not know UBT exists does not file. The city has no record of her business, and a late filing penalty accrues on a return with 0 tax owed. The penalty for not filing is independent of the tax for not paying. The discovery search is 4 steps for any city, not just the 3 named above. Search your city plus business tax or your city plus gross receipts tax. Find the official city revenue or finance department page, not a tax prep marketing site, the actual government page. Find the category that covers services or professional services. Locate the exemption threshold and confirm whether a zero tax return is still required when you fall under it. Register through the online portal. 5 minutes of work that closes a hole most coaches never noticed was there. The penalty math is where the local layer hurts, because the underlying tax is usually small and the penalty for missing the filing is usually larger. A solo Philadelphia practice may owe a few $100s of BIRT a year. 3 years of unfiled BIRT returns generate late filing penalties, interest, and assessment fees that can easily multiply that base tax by 5 or 10. City revenue departments have the same audit and collection authority that state departments of revenue have. They are simply less prominent in the average coach's awareness, which is exactly the gap the city is happy to find for you. County business taxes are rarer than city business taxes, and the check is worth running once at registration time even when the answer is no. Most U.S. counties fund themselves through property tax and do not run a separate business income or gross receipts tax. A handful do. Search your county name plus business tax once when you register your entity. Document the result either way, and you are done with the county layer until something material changes about your address. The cost of the search is 2 minutes. The cost of being wrong is the same cost shape as the city layer. Small tax, larger penalty. Before the next unit, search your city plus business tax and document what you find one way or the other. If a local business tax exists, find the threshold, find the registration page, write down whether a zero tax filing is required when you fall under the threshold, and add the registration step to this week's queue. If no local business tax exists in your city, write confirmed not needed in your founding pack notes. That is a real answer that closes this unit cleanly. If you move to a different city later, rerun the 4-step discovery from scratch. The local layer changes when your address changes, even when state filings carry over.